Pop My Mind exists in order to champion strong, good quality, imaginative, creative talents. What we love doing at Pop My Mind is getting behind that talent to the truest extent, not just commercially, but helping them to get seen in the real world and helping them to expand their practice and gain new opportunities. So because I have a background in mathematics and also being the owner of Pop My Mind, it's really important to me that I keep on top of the ins and outs of the cash situation of the business.
I'm Nikki Larkin, I'm from Gorringe Accountants. I'm the Managing Director and founder of the firm. Cash flow statements are a snapshot of your business, of how much cash you have available and how liquid it is. You could be a growing business, have huge amounts of profit, but if you've not got cash to sustain that, you won't be able to achieve your goals. So a cash flow statement will show the ins and outs of cash flows to your business. Now, compared to a profit and loss account, there are subtle differences. A profit and loss account will be recording sales and costs, which you may not have actually received the money for or paid the money out for at the time. So it is a subtle difference, but a very important difference, because it's actually reflecting when the cash actually has to be paid. It will have, of course, the most important thing, which will be the cash coming into your business from your clients. It will also show other ins to the business, will be any investment that you have from your shareholders, any loans that you might have from your banks. It will also have all of your outgoings of your business, the basic things such as your normal suppliers, so your rent, your labour costs, your direct costs for your goods, and of course all your overhead costs. Then of course it does have that fun thing of your tax payments, whether it's VAT, corporation tax, PAYCIS, and it's also showing out when you're actually paying for capital amounts, paying out for a fixed asset. So it could be showing when you're actually paying for a big piece of equipment, whereas opposed to your profit and loss will be depreciating your equipment over the lifetime of it. The final thing will be actually your finance amount. So if you've got leases or loans, it will be showing your capital repayments and also the interest amounts of what you're actually paying out to your finance partners, of being the actual cash amount. So what's really important is that cash flow statement will be showing how liquid your company is, and also what you should then be able to extrapolate is a cash flow forecast, so that you can see when your business might have tightness in your cash flow, and then you need to act accordingly, whether it's when you need to bring in your debtors much quicker, or you need to start slowing down your suppliers, but to ensure that you can meet your cash flow commitments.
Our particular process is that every month I will download the bank statement. I'll then have a good look through it myself and put a few notes on some of the transactions just to make it really clear for the accountants. The accountants will then take that and produce a really clear cash flow statement that gives the whole team just a really nice bird's eye view of the general ins and outs cash-wise that the business has had that month.
Cash flow statements is really important to understand what those are telling you, because cash is reality. Profit is sanity, cash flow is reality.
Cash flow statements are really important for us because it just gives us an easy understanding of the general health of the business. You know, it's like having your finger on the pulse month to month. It's really important to know that things are going in the right direction, and cash flow statements are a really nice tool to be able to see that clearly.